With the US government shutdown starting today for the first time in years, what will happen to the markets and can we expect a pump or dump? Plus, Solana is bringing a massive company stock on chain and continues to expand in RWAs. This is your Altcoin Buzz News. Hey, what's up, everyone? My name is Cody, and if you're new here, make sure to like, subscribe, and turn on notifications so you don't drop latest content. Follow us on Twitter, altcoinbuzz.io, and as always, not financial advice, and wish the best of luck in your crypto ventures. Also, make sure to join us for our X Spaces Tuesday to Friday at 9 a.m. EST, link down below. All right, good morning, guys. So this morning we are pumping, and we were saying the other day that if we reclaim a daily close above this box here, above $113, we will most likely go back up towards this top here and take out these stops around $117,500. And unfortunately, that's what we're doing. And I say unfortunately because this to me doesn't look like a very strong structure to continue to new all-time highs. It's very possible we could, but I would have much rather we take these stops out at $107,000 and also tag the daily 200 AMA before we're going to new all-time highs, because this what this looks like to me is that it's very possible we come out, we take out the stops above here, and then we massively nuke down here, which would not be as fun. And so I'm not looking forward to if that is the case, which is a possibility, because usually before any big move up, we have a massive nuke down, we have long liquidations, and then we continue back higher. And while we did have a bit of that, we didn't take out a lot of these stops. We didn't tag the 200 daily EMA, which we usually do before the last quarter and going into new all-time highs. And so, not saying that this time isn't going to be different, but I would have preferred this scenario to play out. And so this is the scenario we're getting right now, where I think it is possible. This is a very fragile kind of structure here, and it's possible we continue lower. So it's not my favorite setup, but that is what is happening today, and we're gonna have to watch for New York Open today, especially with the whole government shutdown going on, which we're gonna go on in a minute. But we're gonna have to watch. I think these stops above here around 117 and a half are probably gonna get taken at some point today. We'll probably take out these stops and then maybe close back below it. But we'll have to see what happens at New York Open. But the main thing today is the U.S. government shutdown. So for the first time since 2018, the U.S. is about to enter a government shutdown, and investors are bracing for it. This would furlough around 750,000 workers per day, costing $400 million in daily compensation. So what does this all mean? Let's explain. Now, the last time we entered a government shutdown was in December 2018, in Trump's first term. The shutdown lasted 35 days, making it the longest government shutdown in U.S. history. The average length of a shutdown is 8 days, and its implications spread further when it lasts longer. So you can see the government shutdowns that can last for weeks. We have it in 1980, 81, 84, 86, 90, 95, 95 again, 2013, and 2018. Now, during a shutdown, many federal functions are suspended. Services that the government deems essential, such as those related to law enforcement, will continue. If an agreement is not reached by 12 a.m. Eastern Time, October 1st, which it hasn't been, the U.S. government will officially enter a shutdown. The million-dollar question, what does it mean for the market? Surprisingly, it rarely derails the market over the long run. In fact, 86% of shutdowns saw the S&P 500 and higher 12 months later, with an average gain of around 12.7%. The results are consistent regardless of who the president is. Now, the near-term effects bring more volatility. The S&P 500 tends to finish higher in just 55% of cases at the end of the shutdown. In 1970s and 80s, this typically came with a sharp downturn. However, the S&P 500 has finished higher during every shutdown since 1995. So we can see after the shutdown, the S&P 500 returns afterwards. You can see in the 70s and 80s, we typically finish red, but recently since 95, we've finished slightly green, but I will say in 2018, for the second time, we finished 10.3% higher on the S&P 500, so a lot higher in 2018. And meanwhile, gold is set to post a 10% monthly gain, is now 45% year to date, and gold has been pricing this in for the last few weeks. Couple this with rate cuts into rising inflation, and gold is on track for its best year since 1979. Gold just hit its 39th all-time high of 2025. It seems like we hear every single day there's a new all-time high on gold, and so it's surging now almost $4,000. But simultaneously, the US dollar is on track for its worst year since 1973. In fact, the US dollar is depreciating so quickly that Apollo says it will spark more inflation. The minus 10% drop would coincide with a 30 basis point jump in inflation for the Fed model, and the shutdown won't help. So ultimately, the shutdown will end with a budget bill and more deficit spending, all as the Fed cuts rates into stagflation, prompting a rush into assets and a search for yield. Position yourself accordingly. So that's part of the reason why you can see Bitcoin pumping today, as well as other assets. Going into this, we know there's going to be more deficit, more spending. A bill is going to come out of this, which is not good for the US dollar, but it's better for assets because people are going to be searching for assets that will, bring yield. And so the S&P 500, Bitcoin, and altcoins are surging because of this. The Kobayashi letter also wrote government shutdown facts that the media won't cover. The average length of a shutdown is only 8 days. The S&P 500 has ended higher 1 year after shutdown in 86% of cases. The S&P 500 posts an average gain of 13% 1 year after the shutdown. During the 35-day shutdown in 2018, the S&P 500 rallied 11%. While the government is shut down, the U.S. defers $400 million a day in costs, and the Fed generally turns more dovish if government data releases are paused. Historically, the market actually welcomes shutdowns. And then we also have Eric sharing this clip on the government shutdowns.
You said you might do a lot of layoffs. If Doge is already reducing the federal workforce, why is it necessary to link more federal jobs cut to a shutdown?
Well, the Democrats want to shut it down, so when you shut it down, you have to do layoffs. So we'd be laying off a lot of people that are going to be very affected, and the Democrats, they're going to be Democrats. As you know, this country, no country can afford to pay for illegal immigration, health care for everybody that comes into the country, and that's what they're insisting. And obviously I have an obligation to not accept that. That would affect everybody.
But then on the flip side, State Street's chief investment strategist also explained this about the government shutdown.
Government shutdowns historically haven't meant much to markets or the economy. Brian, the last 6 shutdowns, GDP actually expanded. In 11 out of the last 12 shutdowns, GDP expanded. And in the last 5 shutdowns, Brian, the S&P 500 has actually climbed. So ultimately, this tends to be a big shrug of the shoulders from investors. So I do think earnings are going to be the big story. That's coming up in a couple of weeks in terms of the heart of earnings season. The consumer continues to be spending, so that's good as well. And we're going to enter a seasonally positive time for markets if we can just get through October.
And a quick shout out to Surge. It's this risk-free prediction game on Telegram where you just swipe to guess pump or dump, earn rewards, and pick up some market skills while you're at it. They've also kicked off a weekly giveaway. It's super simple. Every week there's a coin of the week, and this week it's Tau. All you gotta do is swipe to find it on the Surge app, screenshot it, and drop it under their tweet. One random reply wins $50 in USDT, so it's super easy. So check out Surge, have some fun swiping, maybe snag some prizes along the way. And then moving on to Solana, we have Join Republic has announced plans to tokenize Animoca brand's equity on Solana, allowing global investors to gain exposure to Animoca brands through blockchain-based tokenized equity. So Animoca brands, the huge Web3 gaming brand in crypto, is now going to have their tokenized equity on Solana. We also have update. The Solana ETF issuers expect SEC approval as soon as next week with high conviction despite shutdown risks. And Crypto.com is to launch a $400 million Solana treasury. Crypto.com is partnering with STSS to boost Solana exposure, liquidity, and long-term institutional adoption. And Solana shares this where there's now more than 1 billion accounts on Solana, which is a lot of accounts, and I bet most people have many accounts, so I'm curious how many actual users that is. Then also another strong day for RexShares Solana staking ETF with $18.3 million in inflows, continuing its streak into a third consecutive week of net inflows. Now, Solana is one of the stronger coins today and looking pretty good. I will say it's coming into a little level of resistance around $217, so I wouldn't be surprised if we have a little bit of resistance, but I think we'll ultimately break through this level here. Now, I do think we will reclaim this around 217, 218, and if we do reclaim this and Bitcoin wants to continue higher and push past that resistance level around 117,000, if that does happen, I do think we go towards 261 very quickly, especially with these SEC approvals and Solana ETFs that could be potentially coming out. We see how crypto friendly the new SEC administration is, and they want to push these crypto ETFs out very quickly. But I do think all of those will push Solana back towards 260, and then I think probably new all-time highs pretty quickly in Q4 going into October and November. I think we'll probably see new highs above $300 for Solana this quarter, which is pretty exciting. And then moving on to Aptos, we have Donald Trump Jr. and Zach Witikoff announced live that World Liberty Financial's USD1 is coming to Aptos. Aptos is USD1's first move-based integration, and the list grows of those choosing the fastest, cheapest, and most efficient rails in the world. Welcome to the United States of Aptos. We also have Aptos saying Aptos is for payments, PayPal is for payments, and Aptos is a chain of choice for stablecoins, and PayPal knows it. With PYUSD0 on Aptos, via Layer 0 and Stargate Finance, Aptos continues to bridge the gap with the biggest money movers of the world by bringing them on-chain. And Azen says app fees on Aptos hit a record high in September. In September, users paid $6.33 million in Aptos in fees across Aptos apps, the highest since launch. The chart shows a clear uptrend in fees, signaling massive user activity and growing adoption on Aptos apps. What's fueling it? The Aptos Collective and the core team are bringing users closer to the infrastructure, while new features keep excitement high. And Token Terminal says USDC usage on Aptos is at an all-time high, with transfer volume up 400% from Q1 2025. Quarterly transfer volume in Q3 2025 was $25.8 billion, Aptos and Circle. Now, Aptos is looking pretty decent here, but we drew this out a while ago. If you ignore this line right here for now, we drew this out where we're kind of in this long-term range between $4.11, around $5.60. We've been in this range for many months, most of 2025. And we said we're probably going to chop around between here, maybe take out some stops below here, and then continue higher. If this is the leg that pushes us much higher and we go into a bullish Q4, I think Aptos is looking pretty good here. And what you can do is you can draw a midline right here where we kind of have the mid of this range. And so if you want to get involved in Aptos, you can long it if we reclaim this range here and we hold above around $4.68. You can long it back up to the top of the range here, which is a good take profit position because it's very likely we'll reject a little bit. But ultimately, what we did want is we want to wait for this to reclaim this around $5.60. We want to pump above, reclaim this, and that's when we're going to see the biggest move when we go and take out all this inefficiency right here. We always talk about how after we reclaim this range, we move up to the highs pretty quickly. So what I think will happen is if we reclaim $5.60 soon in the next month or two, if we reclaim this, I think we go towards $8.67 pretty quickly. We fill in this gap, this inefficiency, and this is the chart that we keep seeing over and over again that I keep sharing, where we have this bottoming structure form, we break out, and then we fill in this inefficiency pretty quickly. So this is what I'm looking for. You could take this. It's a little bit more risky if you want to take the mid-range back up to here, but a better trade for me and one that's more highly probable is once we do reclaim this level, it's going to be pretty quick that we come back up here towards this and fill all this in. So I like Aptos here. I think we took out the lows here, and if we want to continue higher, it's going to start to look really good in the next coming weeks. And then lastly for today, we have why Coti's $12.5 million token loyalty program could reshape how crypto projects reward users. Now, what if every action you took in a blockchain ecosystem, from holding tokens to making trades, earn you rewards automatically and daily? That's the premise behind Coti's latest initiative, a loyalty program that challenges how crypto projects typically distribute tokens to their communities. On September 29th, Coti announced the launch of Coti Earn, allocating 12.5 million Coti tokens for its inaugural season. The platform represents a departure from the standard airdrop mechanics that have become commonplace in crypto, where projects often reward simple tasks like following social media accounts or signing up for waitlists. Traditional crypto airdrops typically work as a one-time distribution, and projects take a snapshot of wallet addresses at a specific moment and then distribute tokens based on predetermined criteria. Users might need to hold a certain token, complete social media tasks, or simply register for a platform. And once the token lands in the wallet, the engagement often stops. Think of it like a store giving you a gift card for just walking through the door. You get the reward up front, but there's no ongoing relationship or incentive to return. Now, Coti Earn operates differently. The platform introduces token points, which are minted on-chain and distributed to users' wallets daily based on their ongoing activities. According to the announcement, these rewards stem from multiple actions, including holding support assets. Additionally, earning opportunities come from trading on Privax or Carbon DeFi, participating in social channels, and completing educational quizzes or referring new users. The distinction matters because it shifts the incentive structure. Instead of rewarding a single action, the platform creates sustained engagement loops. Users who maintain positions or continue participating accumulate more rewards over time. The token points are liquid and on-chain, meaning users have immediate access to them rather than waiting for unlock periods or vesting schedules that often accompany airdrop distributions. So that is Coti's new method of trying to reward users in an airdrop, but hopefully keeping them on the platform longer than just a single airdrop, which is a good idea, and we'll have to see if it actually works out. Now, this is Bitcoin for today. We're coming up into this level of resistance here, around 117 to 118. I do think at some point we'll probably take out these stops above here, around 100, basically 118. But we'll have to see if we do close above here, or if we want to break back down and then come all the way down here. We'll have to see at New York Open. But this whole government shutdown thing kind of throws a wrench in the traditional TA because we don't know exactly what's going to happen, how long the government shutdown will last, and we don't know what kind of spending bill is going to be approved from this government shutdown. So a lot of unknown factors right here. But TA-wise, I do think we'll probably take out these stops around 118 very soon. So that is the video for today, guys. I hope you enjoyed, and I'll see you tomorrow.